Guys, welcome back to our channel. My name is Schaunn-Anthony Thomas. I'm joined here with Dundas and our special guest David Rose. We're gonna give you a bit more of a quantitative analysis on the Spur Tree IPO. If you checked out our last video, you would have seen our discussion with Ryan Schaunn, where he told us more about the business, how the deal came about, and a lot of the qualitative aspects of the business. But here we're gonna take a more quantitative approach. We're gonna have David take the lead on this one. So David, ready when you are.
All right. So for those who don't know, the prospectus was published yesterday, Wednesday, December 22. It's available on Jamaica Stock Exchange's website, and you can apply for it on Sagicor Investments e-invest platform. So to the next page, please.
All right.
So in this offer, there'll be 335 million shares on offer, with 177 million shares being offered to the general public and 158 million to reserve parties. It is $1 for everybody. The minimum number of units you can apply for is 1,000, which is basically $1,000, and the increment is 100 units. So if you want to buy more units in the company, it's in increments of 100. So it's 1,100, 1,200. You know, you're counting. It's like 1,220, 1,210. So hope you get that out of the way. And next page.
1,210 in a David. Remember, increments of 100 that these people need to buy their shares in.
Of course, that's why you say, as you're counting 1, 2, 1, 3, 1, 4, 1, 5. So for those who don't know, it's going to open on December 29, which will be Wednesday. I'm not sure you're going to see this video, but it's Wednesday. And the thing is, what you should remember is, once prospectus is published, you are not restricted to only purchasing the offer on the day it opens. Once it is publicly available, you can purchase the offer once it's available on the virtual platform of the particular broker. So it's on the e-invest platform right now. So although it's open on December 29, it is already available to be subscribed already. And the thing is, you should always remember that every offer will, go through their entire life cycle. So if they open on December 29, it might close the same day, it might close December 31. Based on what you discuss with your licensed financial advisor, attorney, accountant, whatever, whoever person you're going to speak to, it is best that you understand that if you're going to buy in, remember, it might close the same day as it opens. So I would just get those funds together. So
listen, quick tip. Generally, what we do, what I do personally, any IPO, APO, any offering, treat the opening date like the closing date. Especially for small offerings like this, it might be best served to treat this one as the closing date as well, So
and that's actually been a historical truth in the sense that most of the junior market offerings close within the same week they open in Spesco, Tropical Battery, and so on. So you are right. So Spur Tree, is a manufacturer of sauces and spices, and it's a distributor as well for some companies as well. And IPO proceeds will be used to repay G Capital of their loan of $100 million and pay another $20 million to a director, and they're also going to use the funds to expand and grow the company as well. So we can go to the next page, by the way. And what I also like to point out as well is that all these times and everything, just know that it's by mid-January you should see the company being listed. So what I also remind you is, please make sure that you understand that when it's oversubscribed, depending on subscription, you might not get as much as you have wanted. So let me just break this down quickly. So if you're oversubscribed, the broker might say, hey, only the first 10,000 units is guaranteed, and they prorate it after the percentage. So if you apply for $9,000 worth, and they prorate it to say 10%, with 10,000 units guaranteed, that would mean that 10,000 units is guaranteed, and the remaining $80,000 worth, you'd only be guaranteed allocated under 8,000 units, and the remaining $72,000 worth will return to your bank or brokerage account. So hope you guys kind of get those details clear, Try to make sure you understand, what's going on. That's the next page.
All right, so this is relevant to talk about the breakdown of the GK convertible loan facility.
So I'm sorry you have the picture right here with respect to the formula for the conversion, but try how simple it is, guys. Oh, see there. So GK lent to Spur Tree $100 million, as is highlighted at the top of the page. And and the way the loan works is that if there's an IPO, the loan is repayable immediately. And IPO meaning initial public offering, for those who have missed that term that we're going through. And GK has a particular formula right here in relation to how it's supposed to be converted. I wish we had a chance to have gone through, to discuss how this conversion works. But as I said, GK has their own pool right there, 108 million shares at $1. So they oh yeah, see, they said they opted to convert this already into shares. So part of that is already closed out already in essence. So 300 plus 350 million shares, 108 million shares already gone off of the table. So hope that guys can give you some context in the whole situation. So I want us to go back and look back at the table right there a while ago. So as you can see to the right, it outlines the current company's current debts and so on. And as I mentioned, in this case, the loan tracks 9.25% when we convert to equity, but those were the general terms relating to the company's loans basically. And as you can see, GK's loan was registered against the company's assets to a particular level and so on. And as you can see to the left, you can see that Spur Tree has these certifications and permits, which is important for their kind of business. So we're going to go through it and discuss it later, but Spur Tree does 90% of their sales in the export market, which basically means that 90% of the revenue basically in turn is denominated in hard currency. So they sell their goods in Jamaica, but overseas market is raising most of their take-up. So as you can see right there, the US FDA, which is the US Food and Drug Administration, they have their permits right there for the next 2 years to December 31, 2022, a year from now. And you also see the company having these approvals from the Ministry of Health, Factories Act, and so on. And they have their productive inputs relief. So for those who don't know what that is, so you bring in particular goods into the country, you get particular provisions or allowances. So you don't have to pay a massive duty and bring in your goods, especially if a manufacturer, in the case of Spur Tree.
Don't mean to cut you, David, but I don't want you to go too far on the
No, I'm not going too deep in
on the indebtedness.
No, I know I was going to get this.
Noted that the extent of the indebtedness on Spur Tree's books right now is what you see over there in terms of the short-term loan from GK as well as the director's loan, which the IPO, part of the IPO proceeds are supposed to go towards clearing. So what it will mean is that once this company is listed, it will be basically debt-free. And so there will be a large opportunity for it to be able to raise capital if it can find capital at a good rate,
It's
and able to do a lot of
options.
things. We know that expansion is on their books and those kind of things. So that's good to watch out for going forward.
Options. They have a lot of options, Schaunn, because remember,
exactly, many options.
When a company is listed, they can always just, since they're going to be quote unquote debt free, they can always take out a bond, they can always issue preference shares as a listed company, and use that to facilitate their growth, because in this case,
they're also going to be public. They can just do another raise from the public if they feel like.
Right issue or
well, remember, there's a $500 million share cap limit for them, so they can go and raise money again. But it's a problem. The room will be so small because remember, there is about $330 million after fees and everything. Would after the raise of the capital and so on, there won't be much space for them to raise equity again. Which is why you're saying they had the bond, the preference share, and other creative means to get debt in this case or another form of capital for their future growth. So you can go forward, Nicholas. So you want to take it on, Nicholas, or?
I mean, this is an area I particularly love because myself personally as an investor, I like to think about downside a lot because you get interested in a company to invest because you see something you like about it. So then I like to look at what are the potential risks in the company, and I find that in this prospectus, they are pretty extensive with the risks that they put out. They let you know that there is compliance risk. That means that they have a lot of different certifications and licenses they must maintain in order to operate. As we said, they operate in several markets. So you need approval from the FDA in the US to operate and distribute. There's organizations like that in almost every country that regulate food processing and distribution. Foreign currency risk, as David was saying earlier, they earn most of their revenue from the export market. I believe it's over 90%.
It's right there on the page.
Yeah, over 90%. There we go. Sorry about that. But so I mean, it's good because they report in Jamaican dollars as well. So I mean, you instantly get the benefit of conversion, earning in US dollars and reporting in Jamaican dollars, as well as the depreciation all the time. And a lot of their costs are in Jamaican dollars. As they said, they source a lot of their raw materials from local farmers, and they have their lease agreement at a local space, the Garmex Free Zone, which again is Jamaican dollars that they're paying in. So they have a good advantage. So foreign currency may be more of a benefit than a risk even.
Yeah, I was going to say that it's basically the mitigants are embedded based on how Jamaica's economic climate really is, the trajectory of things over time and expected to going forward. It isn't a bad thing for especially how their business is set up, because as I said, majority of revenue comes from overseas operations, and it's earned in USD, reported in JMD. So as you said, the depreciation of the dollar is supposed to be beneficial to the company in that sense. So that risk is already mitigated just based on how the economy is.
And I was going to further point out that, they mentioned right here that only 30% of their inputs are sourced from overseas markets. But at the same time, they are earning US dollars, so they can just, pay that bill.
Exactly.
So that's the benefit that Spur Tree has in a sense, in reality, that even if their volume, what they sell, is flat, that depreciates by, say, example, 5%, then revenue is going to be reflective at that similar amount. Minus the GMD, the local GMD sales, but to get what I'm saying, so they have that benefits are kind of control embedded in just their business is, and that's why like these kind of, and it's not a person, it's not advice or anything, but like or local companies to be so export driven, because it reduces the risk of being, concentrated in just one market or your domestic market, in this case Jamaica, but at the same time, I mean, that kind of benefit from the different economic factors in your environment.
Indeed. I do want to point out as well that they do highlight that they have one court case that they're going through some litigation. But they said the case is related to an employee and some damages at work, and their insurer is trying to seek a settlement, a negotiation to see what can be done. And even if Spur Tree does not come to an agreement, they are confident that the amount will not be material to their profits or in any real way going forward, and that it will be covered by their insurance.
And as you can further see on the page, they highlight the risk of, the shipping delays and distribution risk, and that's why, they mentioned, they're spending more on ordering glass bottles, because that's been a big risk for almost any manufacturer right now, in the sense of shipping and distribution risk. So the fact that they already said that, they're focused on, just making sure they extra inventory on hand does, protect them. And as they say, the shipping costs are really borne by the distributors, not by them. So
not by them. Yep. I find that I like the mitigation strategies that are being that Spur Tree highlights that they have for the risk that they've highlighted in their prospectus, because in their risk management framework, they pretty much they go at it and they said, look, there is insurance. If the thing can be insured and it makes commercial sense to insure the asset, then they will insure the asset, and they will seek alternative measures of mitigation if it is not viable. So I mean, they go pretty in depth on the risks that they do highlight here.
No, and as the risks are highlighted right here, they are really, some of these risks, like natural disaster, like is a rare occasion, like you have hurricanes and so on, but that's not significantly destructive compared to like a hurricane or some other natural disaster. But some of the others that are highlighted, as I mentioned, aren't necessarily material to them, because it's not a business setup most of the risk that they would face is external, and it's so external. It's not borne by them, but by other parties. So.
Right. So even though it hasn't happened recently in Jamaica specifically, you remember that what we're doing overall here is just looking at things that we generally look for when deciding whether or not we want to participate in an offering. So consideration of what the important risks are very crucial in determining whether or not the company would be able to weather whatever storms, not pun intended.
Indeed. And remember, I mean, it's based on risk tolerance. So some people may be more willing to accept certain risks than other people's.
Yeah.
And so it may be that a particular risk may make this or any other offer, not necessarily this one, but it may make an offer uninvestable for you. But that does not mean that another person may not like it. So, I mean, you have to remember your personal risk tolerance and make decisions after having discussions with your licensed financial advisor.
So go to the next page, Nicholas. So this is just the post
that I like to look out for when I'm deciding whether or not I want to participate is the ownership structure, and we can see that majority of the ownership of the company is tied up in the top 10 shareholders. The 80% of the top of the ownership is in the top 10. The 20 will be to the rest of us as the public.
As I said, best interpretation, he is the executive director in new management sales and so on, and he's one of the co-founders or the original founder of Spur Tree.
Right. So in these things, I generally try to consider where majority of the ownership is. It's also important to note, especially for persons who are interested in who consider stock trading, the movement of the stock. You have to consider how much of the stock is available to be traded on a regular day-to-day basis. So if majority of the ownership is tied up by the ultimate beneficial owners or directors or other persons in management or related parties, then you'd be able to make a more fair assessment as to whether or not the stock may trade in higher volumes or if it may change hands more frequently. If more is tied up, then the float is less.
And one thing I'd like to point out is that, Ryan is one of the co-founders, and then you have Albert Bailey, who's the current CEO, and then you have Anand James, who's one of the co-founders. So you're seeing that concentration within ownership, relation to mainly the founders, which isn't a bad thing, because it's a good thing when you have that kind of ownership focus in a company, especially as it grows and scales. And in this case, the CEO who has scaled business from $200 million revenue to over $700 million revenue is going to be the second largest shareholder after the invitation is closed. So it is a good thing because it basically ensures that you can be relatively feel comfortable that management or the board itself, consider members of the board, have some exposure to the company. It's when they that they have some exposure that you can feel it's more comfortable since they have the best beneficial interest if the company grows and scales. Because what we need to remember is that when a company goes public, their ownership now has a tangible established market value. So the company continues to perform even more based on their continued dedication and interest in the company for it to get better, and the market continues to write better for it. Their wealth and overall net worth increases as well.
Agreed, and that's something I like to see as well is some ownership by management or the board or the founders, depending on who is running the business. But I would definitely love to see that kind of involvement, especially in the public company, because as you said, David, it makes you know that they have a vested interest to see the same things that you want to see, both in terms of business performance totally, as well as share price performance. Because I mean, let's be honest, we invest because we want to have more money. So if the company is making more profit and the share price is not moving, it doesn't help us as much as we want as minority shareholders. We would need the share price to do some adjusting as well. So it's important to me to see, it doesn't guarantee that they care about share price movement, but it's important to me that they have that stake so that they could also benefit. So I know that they stand to benefit as well, and it's something that they would not be opposed to.
One thing I like to point out as well is Anand James. He's actually he funded the Caribbean Flavors and Fragrances, which are the listed company in the JSC. So, you know,
Big up
he
the
sold the
JSE
business
represent.
to Derriman Trading back in 2014. But at the same time, this is a good thing because at least one of the founders in this case, so Spur Tree, as one of the directors and major owners, has at least some experience in terms of being associated with listed companies. So it's also benefiting a look at as well. I wish we could go
Especially
to the
listed companies on the JSE at that.
Yep.
I wish we could go through the board, but that's another time. But can go on, Nicholas. So we're just gonna go through and see, these different products they offer. For those wondering what SQF is, it's a particular certification that allows you to get that kind of opportunity to export to different markets. So, like what they say, you have champs, then you have national championship, then you have Olympics or World Championship. Like these certifications give you that kind of opportunity to reach bigger markets. And there's a reason why I kind of bring that comparison in place because the thing is, a lot of our companies here in Jamaica make good products. Don't get me wrong, because they don't follow certain, levels of standards or particular qualifications. They're confined just to Jamaica. So safe. I know I know S is safe, and then F is full. I think Q is quality.
Quality, I believe.
Yeah, but as I said, the certification right there really shows that they have that opportunity to really export because they have SQF and you have another one that's Honey Bun and even Jamaica Tea's House, another certification. But this is a good thing, and like I pointed out right here, I've been exporting to these markets over 10 years, which is even our main remittance markets as well. So yeah, you can see the paper jelly right there in front of you, and Dundas, just scroll through and show the people.
Yeah.
Before
So
we
we'll
scroll
show you.
through, I just want to make a point of saying, on that point on certifications and their market. So it's very good that they keep investing in themselves and getting different certifications. And as we saw earlier, they keep compliant because they have a lot of different certifications and licenses that they need to maintain. It's good to show that kind of investment because it shows they're still dedicated to the vision of
I just remember,
continuing to export. As they say it blatantly in the prospectus that the export market is their main market and that they will continue to be their main market. They will continue to offer products in Jamaica and hope that that market segment grows, but they're targeting the global market. So these kind of investments in making sure that you have the requisite licensing, certification, and those kind of things to continue to export and get yourself over in those markets is very, very major. As well as the fact that they said it's not only the Caribbean diaspora that is enjoying their products. As of recently, they say over the past few years when they've done their checks, people of different races and nationalities are buying the Spur Tree products in an effort to get a Caribbean style to their foods. I mean, again, that those kind of things are very, very major when you're talking about these products here that we're about to look at.
and I just remember the name certification. Actually, it's HAACP, a certification that Jamaican teas and Honey Bun have.
Okay.
And a quick segue away from just the certification. You mentioned a lot about the export market, and I just thought it was very important to draw a comparison. Yeah, the companies are very different in size, but last year a lot was shown, especially throughout the pandemic, with how big Jamaica's diaspora can play a role in the revenue of the companies out here. GK through GK Foods was a very, very huge example of how the diaspora can really impact the company's position and how well they can grow, because GK Foods benefited. I can't remember exactly what the percentages were, but it was significant growth that was primarily attributed to export sales. I recall Jamaica Teas as well had a very, very strong quarter, at least one of them.
Strong year.
Yeah, definitely had a strong year, but primarily there's a quarter where they had blowout.
I believe there was a blowaway quarter for it.
Yeah, export sales
Q3.
they carried majority of it. So that's something that makes me very excited for something like this, because for it to be so heavily based in exports, knowing well how powerful the Jamaican diaspora really is, it's amazing.
I mean,
So,
not only just the diaspora though, Dundas. I mean, think about brand Jamaica and this Jamaican seasoning. As Ryan said in the previous interview, the name Spur Tree just sounds so Jamaican.
yeah.
Those who are local can identify with it, and those who just are familiar with the culture can see why it's associated without even knowing the place, you know. So I mean, uh, the brand, being a Jamaican brand, gives it the ability to stretch across outside of the diaspora into people. Look at how hip hop music has become inspired by Caribbean music, and all of those kind of things. So, I mean, when you look at where our brand is going as a country and as a region, that could also be a growth factor. And the global market is much bigger than the local market. So,
Yep.
the, I agree with you. It's very exciting to see. Um, I hope it continues on the same trajectory because it's very impressive so far.
So we'll
Yes.
show you a few of the product lines. So their principal activity is the production, distribution, and sales of premium quality wet seasonings and sauces. So I'll show some of them here. Go ahead, Mike.
Season easy.
Big up the jerk seasoning. Big up the Scotch bonnet pepper sauce every
Big up the
time.
reggae table sauce. Yo,
Big
listen.
up the reggae table sauce and the
Listen,
browning. Trust.
bro.
Big up the festival mix. I've used that before too. I'm not gonna tell any lies.
All right, so the company's revenues have significantly stepped up, especially in the last 2 years. And for those wondering, the company's financial year ends on December 31 to December 31. So what you're seeing right there is December 31, 2020, 2019, and so forth. So you're seeing that the company's revenue has grown from just under $290 million in 2016 to $700 million end of 2020. And that's a pretty good step up. It's considering that this company would have been scaling as time progresses and had seen the biggest jump within the COVID period.
Mm-hmm.
Mm-hmm.
And as you can see in the notes right there, it mentions the compound annual growth rate is 25%, which shows that they've been having some extremely strong performance and growth over these last couple of years.
Mm-hmm. And I want it to be noted, I mean, it seems to me, I mean, even though we're just examining this 5 year period based on what is in the prospectus and we can't speak to anything before, um, they actually expanded their warehousing from, I believe it was 8,000 and change square feet to 11,000, their production facility, sorry, 11,200 square feet in 2016. So it's safe to assume that they were growing even before this period that we can see as to the rate we can't speak. But
Yeah. And as you go down further, you realize that the company's gross profits have been compressed. We're looking through the notes, people. We didn't see why it was being compressed, but why am I saying it's compressed? So for context, in 2016, their gross profit margin, meaning gross profit divided by revenue, was 38%. Come down now to 2020, it's like I think it's around like 25, 27,
27%.
yeah, 27%. And you know, it's good when your revenues are going up quite sporadically and quite fast to see your growth in revenue, but at the same time, it's important to kind of see that translation to gross profit as well, and further to net income. So you're seeing that significant step up in revenue or turnover, but you're seeing less go down to the gross profit line. I was looking for some more detailed explanations in relation to why that's kind of stagnated in essence in terms of the growth in the gross profit. But my management knows what they're doing. I don't know what strategy they could have implemented to see the growth of the business. But if the company is growing, I have no questions. Management do what it needs to do best. And as you're going through for operating expenses, you saw a big spike in 2018, so from 96 million to 115 million. But it's been relatively fair and stable between 86 to 90 or almost $100 million. And when you went back through the audited notes, some of the things that they cut back on was, like travel entertainment, marketing expenses, other expenses. But the two significant expenses that right there that I mentioned that have been cut would have been traveling and marketing. 'Cause, when the pandemic hit, There's no reason for you to have travel and entertainment, and then when marketing went digital. So, that's just one perspective. And like as you are going along for net income, you realize it's tipping up slowly but surely. And it's a 2020 where you see a good step up in profit in relation to the growth in uh, revenue as well. What I like to point out is that for those who don't know, when you're in the junior market, you have a tax remission for 10 years. Within the first 5 years, it's a 100% tax remission. And within the second half, you get a 50% tax remission of your regular rate. Spur Tree is what you call a regular company, so their tax rate is 25%. This doesn't mean that a company will not pay the taxes altogether, because there might be cases where, just like we saw with Fontana or with Tropical Batch, where they had a tax expense or a tax gain in a particular period. So,
Taxation recoverable.
thanks. So, what you're going to see basically is that going forward next year, you will see that taxation line really be existing for the next 5 years to any significant degree, and companies able to scale pretty fast and pretty quickly, then those tax savings really can come in handy.
Right. So let me just quickly mention the impact of the tax
Remission.
rate, the tax rate that's offered for the junior market. So initially you'd pay 25% for the first 5 years, as David mentioned. You'd pay 6% effectively, and for the next 5 years you'd pay 12.5% of profit before tax. So that one before, so it no income tax payable whatsoever. You are going to have situations where there's an anomaly. For example, with Tropical Battery, there was taxation recoverable. On the flip side, for Fontana, they still had taxation expenses for the year. So it won't be a zero. It won't necessarily be zero for every year going for the next 5 years, and then afterwards for the change for the next 5 years. There might be situations where changes as a result of deferred taxation or whatever the case may be may have some amount being in the taxation line. So it won't necessarily be zero, but it will significantly be changed. So we can expect that in the coming years, net profit will be impacted by significantly less taxation.
One thing I like to point out as well is that for those who don't know, back in the past, before the current government, there's something called a minimum business tax of $60,000, which you had to pay each year. And so, for example, JetCon, when you look at the tax line, it's $60,000 for like 1 year, 1 year, 1 year, 1 year. Like, why is this tax line here? And you go through, you realize that there was no income tax, but at the same time, they had the minimum business tax to pay. So that's another example I can give.
Thankfully, the minimum business tax has been abolished, so you no longer have to pay a tax to be operating a business. So it should be closer to zero, barring any of those examples, such as you said, any taxation trickery. Who fully gets taxes anyway?
Facts.
So the company's assets have grown from 116 million to over $402 million end of 2020. Now, from what you can see with the balance sheet, you can see that the company's non-current assets have grown at a slower pace, and that is mainly because the company doesn't necessarily have to, as you'd say, own a particular amount of property or so on. Because as we know, the lease property of garments and so on, and the current assets will be like your cash, your receivables, inventories. So that is why you kind of see that stepwise increase in assets, because you're seeing that increase in revenue at the same time. The general liabilities are relatively stable as well. And you see that current liability step up in 2018, which is, I believe it's from the GK loan. And you're also seeing where the equity segment is going up as well. It's going up slowly but surely, but the last 3 years have been the most significant.
In line with the most significant levels of profit.
Exactly. So let's go to the next page. So for those who cannot see, for us, as you can see, the non-current assets is $190 million, and for those who don't know, $81 million worth of that total non-current asset is the property, plant, and equipment. And for the book of their assets, which is the current assets, the most of it is in receivables. For those who don't know what that is, imagine you you charge somebody for a product or service, they pay for a deposit, for example. Let's say you charge them $100, they pay 80 or you 20. That's an example of a receivable, you understand?
When receivables refers to all money owed, it doesn't necessarily have to be a deposit. It could be full credit terms or whatever. Just once the money is owed to you and the goods or services have been delivered.
Thanks.
Mm-hmm.
And at the 2020, it was $130 million. Then the inventory base was $76 million, and it includes, raw materials, your work in progress, your finished goods. Your cash balance was $28.5 million. It wasn't as significant or strong. And one thing I forgot to mention was that in their prospectus, they said the dividend policy is expected to be 25% of net profit. So for those who don't know what does that mean, so there are two ways to make money from a company when it goes public. One, capital appreciation, buy low, sell high. That's not buy high, sell low. And then you have dividends. Dividends is company's profits paid to shareholders. So what they're basically saying is a quarter of that net profit right there, which is $70 million, you can pay up to that amount. But the thing is, you have to pay an amount right now, or anything significant for the next year or two or whatever, depending on their growth stage or growth projections. So dividends aren't guaranteed, but at the same time, it's only 25%, especially for a manufacturing company of their size or growth prospect. So that can give you at least some ideas as to what's going on. And as you're seeing on the right side of the screen, you see the short-term loan be the bulk of current liabilities, $170 million. Payables pretty small, and in fact, I can't do the math right now immediately, but their current ratio is pretty strong in the sense that their receivables can really cover their entire current liabilities.
Mm-hmm.
GK is converting the loan to equity, so that shows you that the company really has that kind of financial leverage or space to, have
Right, yeah.
options.
Let me just
Very, very lean
before we move
company.
past the short term loan, just also be mindful because that's a number that might stand out to people, and let's just not forget that this amount is currently a short term loan because it could have matured in at November 30th of this year, but that's what is it appears as if that's what's going to be converted to equity by this IPO. So that's why you seem to see this large short-term loan balance here. It's not expected to be seeing that same amount for the next reporting period. So just bear that in mind.
Exactly. So let's go to the next page.
All right. So before we're looking at the full year ended December 2020, that was a long time ago. So
Yeah.
no, we have
That was
uh-huh.
because those were the last audited numbers we were able to get because, well, that they had in the prospectus because you audit at the end of your financial year and the end of their financial year is December.
Right. So now we're in December of 2021, and we have up to August 2021 financials to show us a better picture of where it's expected that the company will end their year at. And the first thing that grabs in my eyes is where the profit line is right now. We're at 8 months, and we're $2 million off the last entire year. So we'll have 4 more months just to make 2 million.
Yep.
So
But let me give you a joke. Let me give you a joke as well. So I forgot. So apart from the tax line basically vanishing, if they get listed, the finance costs would vanish as well.
Indeed.
Not necessarily because of just the the exchange rate gains or losses, but also because they're going to be paying interest expense or current interest expense on the GK loan.
Mm-hmm.
right. So majority of it would be eradicated since the loan would not, and the loan had a pretty high interest rate. I think it was like 9.5%.
Yeah,
Right. So we'd expect that we won't be seeing such significant finance costs going forward, and especially considering that again the way how the business is traded, with majority of revenues being earned in USD and reported in JMD, foreign exchange losses not much of a concern based on the trajectory for now, at least. In the short term, we can assume that you wouldn't expect there to be significant losses in foreign exchange translations.
And one thing I want to point out was that it's actually 9.25% the interest rate, but that's pretty still
1.25.
a steep still.
Yeah, especially something that's fully
Especially for
secured
secured
by the bench.
loans.
Exactly, fully secured by the bench of the entire amount, fixed and floating assets over the entire amount, and it was still 9.25%. But that's gone.
Well, and one thing I have to point out as well is that you've kind of seen the company get more better, I should say more efficient or good at expense control. So can you realize that the gross profit is kind of within 8 months? When you look at revenue, gross profit vis-a-vis is pretty good. In the sense that 542 come down to 161 versus $700 to 186. So the margins are basically expanding again, which is pretty good and healthy. You know, you don't want the gross margins to be contracting. And as you rightfully mentioned, they probably hit the entire financial year in just 9 months, but in this case, we're going to see up to the 8 months at this time.
And just to give a slight little picture of what it may look like, I annualized the 8-month financial, and that would come out to revenue of approximately 830 million, which would represent a 16% growth for the year on year.
And something else to point out is that in this case, Spur Tree acquired a company in St. Thomas. Exactly, I can't remember the full name of the company, exactly something at the end of September. So these numbers would actually be higher since the company have a new subsidiary. So when we see the RT numbers come out next year, it's going to look even bigger than what we're seeing right now for what we're seeing at the moment.
And
Indeed.
just also sort of the reporting that will impact. I think that this acquisition creates a very big opportunity for the company overall. Yes, we'll see an increase in revenue and increase in profitability based on the fact that the company has been profitable historically. But it's something that I think is very important to think about, because outside of just the reporting, it gives the company an opportunity to benefit from economies of scale. And remember the name of the company?
I don't remember the full name.
All right,
It's
so
the
the
next
company that was
page.
acquired, their margins aren't as beautiful as Spur Trees, but they do have significant revenues, and it's expected that, you know, with the capacity that is afforded with the merging of both companies, we may be able to see increases in the margins for Spur Tree going forward.
I found the company name Exotic Products Jamaica Successors Limited. They're based in St. Thomas, and they made the Aki. That's what I recall.
Yeah, okay,
Yes,
Express.
Ken Aki. I expect that acquisition to add a lot of revenue. I don't expect it to trickle down hard to the bottom line right away, because as Dundas said, their margins are not so wonderful. I think they made over $200 million revenue in the last year,
That's the
and
report. Yeah,
came
six
down to, I
million.
believe, $4 or $6 million in net profit.
Mm.
But what we can see is that Spur Tree clearly has a good cost control framework, and they like to operate their company very lean, it would seem, as we see by the low amount of debt and those kind of things. So if they can apply those same principles to exotic products, then it could be that they are able to extract some more profit from even existing revenues before we even talk about growth, which is definitely something that's on the table. You don't acquire a company to have it stay stagnant. You
Exactly.
integrate it and grow it, you know. So when you think about those kind of things, I believe in their own projections, they say that for this current year that is ongoing, they expect it to be $12 million in net profit, I believe, and they want to double that over the next 2 years.
Mm-hmm.
Through their own efficiencies and implementing, as we say, some of their cost control frameworks and those kind of things. So I think that acquisition is something that becomes more beneficial profit-wise over a longer time period, but it's definitely something that's exciting
Something else
and
to
will add
point out is
revenue
that
immediately.
remember that they actually building the highway in St. Thomas right now, so that's actually benefit the company and the surrounding environment, because
Yep.
the transport route would actually be more efficient.
Mm-hmm. Which cuts a whole heap of those minor costs that we don't think about, gas and wear and tear on the company's vehicle and those kind of things that you just see in your profit line, see in your expense line. Sorry, but they add up. They add up. So
Definitely.
if there is any kind of alleviation of those kind of expenses, it can those alleviations can also add up just as the expenses add up, and help improve your margins and your profitability.
So we're finished going through the entire prospectus, guys.
Yes, so this was a breakdown of the key areas that we particularly look for. It's still encouraged that you go through the entire prospectus. We'd like to keep our channel open for discussion, certain topics that we may not have mentioned. So we'd ask that you talk to us about what you think was important in the prospectus, what stood out to you. Leave a comment and describe what were your favorite parts, what parts didn't you like, what do you have questions about, and let's see if we can, have a discussion about it so we can all get an understanding of where Spur Tree is going. Spur Tree. So
Yeah,
in
guys,
conclusion,
use up the comments.
yep, use the comments, talk to us. We want to have dialogue about these things. These things really excite us.
We want to see.
So
Let us know. Will you be participating? Will you not be participating? As Dundas says, is there anything we didn't touch on that was extremely important to you? Anything that was not as important to us that was more important to you? Let us know, definitely.
So will you be participating?
Personally,
Hmm.
I will be participating. I'll say
I'll be
that on camera.
participating
I'll be
too.
participating.
You participating, David?
I'm an
Yeah.
avid Spur Tree user, so
Yo,
I'll be
if
participating.
I
Only-
walk into my kitchen right now, bro, you think I
I
already
have
have
4
some
bottles of
Spur
Scotch
Tree,
Bonnet pepper sauce in my cupboard right now. 4 bottles.
and that's me
2
on
buckles
that
of jerk
tabletop
seasoning
sauce
in the
by
fridge.
by the 6.
No ramping.
I'm going to say obviously since you're in public because it gives opportunities to get this kind of exposure and opportunities to more companies of different spaces in the manufacturing space, and we really need more companies of this nature to come public because the market is mainly financial companies at the moment. We've seen like the lab and other companies of different natures or spaces come into the fray now, but it's still good to get that kind of tangible exposure to like a manufacturing company, which provides goods that we're going to still need because even when COVID is over, if it kind of cool down on the other side, people still going to eat.
Yep. And I mean, just to tack on to your point there, I mean, that's something that I love. Even again, third plug in that last video that we had with Ryan, where we spoke about the prospectus and the Spur Tree IPO that's coming out. I told him that I love the diversification that it brings to the market. You have another manufacturing company, but this one is spices and sauces. So it's different. And as you said, you rightly pointed out, it's mainly financial companies. They make up the bulk of the market. So it's really, really good to see different kinds of companies. Big up Mailpack, big up Tropical Battery, big up Lab, big up Spur Tree,
Lumber,
big
hardware,
up Lumber. Though very, very exciting to see different kinds of companies come into the market. It shows growth for the country. It shows growth for the stock exchange and provides many, many wealth building opportunities for Jamaicans who are willing to participate. So I agree with you. I love the listing, as I will call it, even though it's not listed yet. But I love the IPO, the fact that it's being offered.
And particularly for me, I feel like I love where it's going for Jamaica's economy overall. But what I love the most about these and things, this is in the same bucket that like Fontana for me. It's like the household names. People buy Fontana because they go to Fontana. Right now, that Spur Tree, who doesn't use Spur Tree, bro? Like Spur Tree is a household name. So outside of just being, inclusive for the different type of companies on the exchange, it's something that a lot of people actually use. And well, speaking for myself, I use Spur Tree a lot. So I'm very excited about this because before it came, like it's literally I sent a video in the group. I opened my fridge and it was just so many Spur Tree products in there. So this kind of thing is like it's just really, really exciting to see.
I'm in the group. I can confirm.
Yeah. Yeah, I'm not copying. I don't do that. So outside of just it being an exciting company, to see that it's something I love when Jamaica, as you said earlier, brand Jamaica is used. I love when brand Jamaica is sold. I love when we use the strength of our diaspora, and that's the main strength of Spur Tree, and that just makes it so much more exciting for me.
Like a licensed financial advisor, or at least check out some relevant resources. And check relevant resources. So Spur Tree, is publishing like videos and other historical accounts on their social media accounts, like their Twitter, their Instagram, Facebook. So what you actually might find there. At the same time, just call the company and ask them some questions, or you can just contact the real estate persons in the document, in the prospectus. So the person at GK Capital, they can email them and ask them particular questions. Just ask the question you need to ask, and the thing is, even if you don't get the location you want in the IPO, it's a listed in the market. So if you still want to buy more units, you will have the option to buy it when it's listed, if it does become a successful offer.
Mm-hmm.
You think it will?
Try to find additional information other places. As David said, the company will have they will be posting information in other places. Speak to your licensed financial advisor to find out if this offer is the best for you, if it meets your objectives and your goals. And let's have a conversation about it. Big up Finance Twitter JA. You can at 876invest. On Twitter, you can use the hashtag Finance Twitter JA. You can at David. Everybody knows David. David, what's your handle?
JC92 on Twitter, JC940 on Instagram.
Let's have a conversation about it. Just at us, we will talk about it. Let us know what your thoughts were, and do not forget to ring the notification bell so you will never miss another one of these videos.